question is there in study material. A similar question is there in study material. Effective capital you calculate, then you get the profit sharing ratio. Then you calculate interest on capital. Okay, on the effective capital you calculate directly. Interest on drawings, one is first of quarter and another is end of each month. Yes, that should be an easy question. Let's go into next one. Okay guys, next, ABC are partners, partnership question, 15 marks. Sharing profits and losses in the ratio of 3:2:1. The following is the balance sheet of their firm ABC Trading Corporation as on 31st March 2024. Balance sheet is given. Capital of ABC, general reserve, trade payable. Land and building, machinery, furniture, trade receivable is there, provision is already there. Stock, joint life policy, cash and bank. Okay, we'll see what happens. C died on 30th June. When did they give us the question? 31st March. C died 3 months later on 30th June. As per partnership deed, the following arrangement was put into effect. Look at the first one. Goodwill of the firm should be valued at 2 years purchase of average profit of 4 years to 31st March preceding the date of death. If the person dies on some day, 31st March preceding the date of death, you are going to calculate profits were given as under. Now see this. 30th June, he died. Before the 31st March of 2024, use these 4 years, you'll get the goodwill. Okay, so it will be 1,14,000 plus 1,22,000 plus 1,19,000 plus 1,25,000 divided by 4, multiply into 2. That will be your goodwill. Goodwill of the firm. Goodwill of the firm is 2,40,000. Goodwill will not be opened in the books of accounts. We already know that. And C was to be credited with this share. What is C share here? C share. C share is 1/6 into 1/6. So 2,40,000. Basically, C share of goodwill will be 40,000. And this will be given by A and B. In what ratio? You have to calculate sacrificing ratio or gain ratio. Sacrificing ratio or gain ratio. You have to see. Go and check. Old ratio is 3:2:1. New ratio is 5:3. You will get the gain ratio and you have to give it. See, if in case one of the old partner is also sacrificing, then even he has to be paid. Okay. Profit till the date of death to be ascertained on the basis of average profit of previous 4 years. Till the date of death, you have to give profit. No. And share of C was to be credited to his capital account. What is the average profit of previous 4 years? 2,40,000 is the average profit. Into what is the share of profit? 1/6 into 3/12. 3 months. Correct? He has died on 30th June. 2,40,000 into 3/12. 10,000 is his share of profit. So we'll pass the entry. P&L suspense debited or P&L adjustment. You can take P&L adjustment or P&L suspense debited to C's capital. C's capital. That should be it. Assets were to be revalued. Land and building appreciated goes up. Machinery depreciated goes down. Furniture fixtures revalued at 1 lakh. How much is the furniture and fixture value? 1,05,000. So furniture and fixture is also going down. Value of stock to be taken as 90,000. How much is the stock value? Stock value is 85,600. So stock value is going up. Okay, simple revaluation points. Put it into revaluation account. Provision for doubtful debt should be increased by 1,800. Not increased to 2. Increased by 1,800. So we'll pass the entry. Revaluation debited to provision for doubtful debts going to be 1,800. Clear guys? Sum of 2,40,000 was received from insurance company against joint life policy. How much was joint life policy in the books? 90,000. You got how much? 2,40,000. You can do 2 things. One, you can pass the entry bank account debited 2,40,000 to partners capital account. Or you can put this into revaluation account also. Okay, bank account debited to JLP account, joint life policy account, 2,40,000. Okay, how much was the value? 2,40,000. 90,000 was already there in the books. So 1,50,000. 1,50,000 is the profit, correct? 90,000 is already there in the books. 1,50,000 is the profit. This is shared between A, B, C in the ratio of 3:2:1. It is shared between all the partners. Clear? Amount due to C was paid to executors. It is not transferred to loan account or anything. It is paid to the executors. So you're going to just make the entry. C's capital account debited to bank account, end the story. Prepare revaluation account, partners capital account and balance sheet. Shouldn't be a problem. Balance sheet when you're doing, what will happen? Whatever revaluation has taken place, that you're going to do the adjustment. Joint life policy is not going to be there only. Cash and bank account, be careful. You got the money of joint life policy and you're going to subtract the amount that is going to be paid to the executor. That time you'll get the cash and bank account balance. Next question, guys. Following are the details of assets and liabilities of Mr. Sarthak for the year ended 31st March 2023 and 31st March 2024. 2 years they're given, 5-mark question. Okay, building, furniture, everything. It was decided to depreciate building by 5%. Okay, so this becomes 2 lakh minus 5%, so this will become 1,90,000. The same question is there in study material again. Furniture is to be depreciated by 10%, so this is going to be 67,500. Okay, on 1st June, additional capital of 40,000 was brought in the business. Proprietor has withdrawn capital of 2,500 per month for meeting family expenses. Prepare statement of affairs on 31st March 2023, 31st March 2024. Find the profit or loss earned by Sarthak for the year ended. So what you're going to do? Building is an asset, furniture asset, inventory asset, liability and liability. So what you're doing when you're doing 31st of March 2023, you'll get the capital on 31st of March 2023. Okay, balancing figure will be capital. Now to that, what you will do? Additional capital. Add 40,000 additional capital minus drawings. Drawings is going to be 2,500 per month. So 30,000 you're going to subtract. 30,000 you're going to subtract. So you'll get some value over here. Okay, and then you calculate balancing figure here also. Calculate the balancing figure here also. That time you'll get capital on 31st of March 2024. Whatever difference you get, that is going to be profit or loss. Are you getting this? Whatever difference you get between these two numbers will be the profit or loss. In case this number over here, if this number over here, it is higher and capital is lower, okay, that means it's a loss. If this number is lower and capital is higher, balancing figure is higher, that means it is profit. Okay, simple 5-mark question from income records they have asked. Nothing else from income records. Remember, we have always been telling either they will ask final accounts big question or income record big question. They ask final accounts. Okay, let's go to the next one. 10-mark question 5A. From the following income and expenditure account, what are they given? Income and expenditure account they are given for the year ending. You are required to prepare receipt and payment account for the year ending 31st March 2024 and balance sheet on 1st April 2023. Balance sheet as on 1st April 2023 they have asked. They are asking you what receipt and payment account for the year ending and balance sheet, opening balance sheet they have asked, not the closing balance sheet. Okay, understand this. Income and expenditure account is there given. Lawn maintenance. Okay, lawn maintenance will go into payment. General expense will go into payment. Stationary depreciation will not go to receipt and payment account. Depreciation is a non-cash. Depreciation on sports material will not go into receipt and payment account. Honorarium will be going into payment. Okay, surplus will go into balance sheet. So it's not going to bother us. Subscription, receipt, admission fees. Anywhere they have told admission fees is to be capitalized. No, receipt. Okay, sports material second hand, your purchase, receipt. Okay, and then entertainment is also receipt. This is basically sale of sports material, sale of second hand material. Okay, now see what they have asked. Cash at bank, opening balance is there, closing balance is not there. This will be the balancing figure of receipt and payment account. When you prepare receipt and payment account, this will be your balancing figure. Stock of sports material 30,000. Sports material is 30,000. Closing they have asked. How will you calculate sports material closing? 30,000 is there. Depreciation on sports material is there 22,000. But 20,000 you should be able to get. Now see the fun here. Sports material depreciation 50%, stationary depreciation 25%. So if depreciation is 22,000, sports material depreciation is 22,000. This is 50%. That means what is 100%? It should be 44,000. No. What should be 100%? Sorry. Yes. What should be 100%? It should be 44,000. But can you see here it is 30,000? That means 30,000 plus 14,000. Then it becomes 44,000. That means we know that there is a purchase of sports material. Purchase of sports material. This purchase also will go into receipt side. Receipt side. Sorry. What am I talking? This will also go into payment side of receipt and payment account. Are you following this, guys? Opening balance they give, depreciation rate they give, and depreciation amount they give. Depreciation of sports material is 50%. So depreciation is 22,000. So 50% is 22,000. How much is 100%? 44,000. But can you see opening balance was 30? How did it become 44? If they purchase, it will go into payment side of receipt and payment account. Clear? That is one thing. Then next, depreciation on stationery is 25%. Stationery is 25%. So now 1,500 is the depreciation on stationery. Stationery what they have given? Stationery opening stock is given, closing is not given. So 1,500 is 25%. How much is 100%? So this becomes 6,000. How the 4,000 became 6,000? Here also if you see, there is a 2,000 which is purchase. 2,000 purchase of stationery. You won't find this purchase in income and expenditure account. Why? Income and expenditure account is like P&L. You won't find purchase of asset there. So that will also be considered. 2,000 also you have to put. There is also one sale of sports material. Sale of sports material. So what happens now? 44,000 is there? Yes. 44,000 is on which we have calculated depreciation. Sale of sports material. Let's assume that you have sold it on the last day. Okay, let's assume that you have sold it on the last day. If you have assumed that this is sold on the last day, on this there is going to be full depreciation. If you assume that it is sold on the first day, then on that there is going to be no depreciation. Here, that is one thing you have to be careful when you are calculating. Okay, when you're calculating purchase, for example, when you're calculating purchase, what you're going to do? 30,000 became 44,000. 44,000 at the end of the year. After sale, before sale. So better to assume, take the assumption that it is sold at the first day of the year itself. Okay, and 2,400 sports material, sale of second-hand material. You can do one thing. It is scrap. Okay, you can take it as scrap sale also. It is not going to be bothering us in our depreciation calculation. This is one tricky area which is there. You have to be careful about. Okay, because they have not told the date on which it is sold. Now, can you see over here? Tournament fund. After deducting tournament expenses, 14,000. Tournament fund it has become 6,000 after deducting. So receipt and payment account, what you're doing? Tournament expense you're going to take it as payment, and tournament fund is 6,000 after deducting. So 20,000 is taken as receipt. 20,000 receipt, 14,000 payment in your receipt and payment account. Donation for club building. This is going to be taken as receipt. Subscription due is given. What will you do? Subscription due. You have to be careful when you're calculating over here. 1,05,000. Okay, last year's outstanding or last year's receivable. Okay, would have been received this year. So you're going to add 10,000 plus 10,000, and this year's receivable will be received next year. So you're going to subtract 15,000. So it becomes 1 lakh. This will be the receipt of subscription. Now, stationery stock 4,000, closing we have already calculated closing stock. Now, what did they ask you? Balance sheet on 1st April. They didn't ask balance sheet on 31st March. They asked balance sheet on 1st April. Opening balance sheet they want, and they want you to prepare the receipt and payment account. 10 mark question. Clear, guys? Yes. Let's go to the next one. Attempt any one of the two they have asked. Mr. A accepts 2 bills of exchange on 1st June 2024 for 1,50,000 and 60,000. 2 bills of exchange drawn on him by Mr. B. B is the drawer. A is the drawing. Bill of exchange for 150,000 is for 2 months, and bill of exchange for 60,000 is for 3 months. First one is for 2 months, other one is for 3 months. Mr. B got the first bill discounted with the bank, 1,49,000 on June 3rd. Okay, that means 1,000 is discounting charges. On August 2nd, Mr. A requested Mr. B to cancel both the bills and drew a new bill on him with the combined amount of both the bills along with interest of 12% per annum for a period of 2 months. So first bill is discounted. No, guys, that you have to reverse. That when you're reversing, what you're going to do? Say journal entries in the books of B. B is the drawer. So for first bill when you're reversing, you'll pass the entry A's account debited to bank. You have to pay bank. Second bill when you're reversing, you'll pass the entry A's account debited to bills receivable. So now you have 1,50,000 plus 60,000. Total bills are 2,10,000. They said along with interest 12% for a period of 2 months. So 2,10,000 into 12% into 2 divided by 12, you're going to get interest of 4,200. So 2,14,200 is going to be the value of your new bill. Interest is an income, but it is not received. Interest is an income, but it is not received. 2,14,200. So interest will be credited. Bills receivable will be debited for the entire amount. 2,14,000 before the due date of the renewed bill. Mr. A becomes insolvent and only 40 paisa is received. So 2,14,200 into 40%. 40% that is 85,680 received. 2,14,200 into 60%. 1,28,520 is going to be matters. Okay, simple question, guys. So 40%, 40 paisa in a rupee could be recovered. So 40 paisa is recovered. 60 paisa is not recovered. 60% is going to be taken as bad debts. Easy 5 mark question. Or they have asked one more. Following details are available of raw material of manufacturing unit. Okay, let's go into that one. Okay, next question, guys. Following details are available for raw material of the manufacturing unit. Opening stock is given. Purchases issued for consumption. Purchases again issued for consumption. Issued for consumption. We have these kind of questions in the study material as well. 5 mark question from inventory. Manufacturer also incurred the following expenses: freight 300, unloading 150. Let him incur. No problem for every purchase respectively. Warehouse rent is also there. Administrative expenses also there. You are required to find out the value of inventory if the company follows weighted average method or FIFO method. 2.5 marks, 2.5 marks for both the methods they have given. You have the situation here. Weighted average method. Whenever you are issuing, follow calculate weighted average price and issue at weighted average price. Here also weighted average price. Here also weighted average price. If it is FIFO, whatever is the earlier stock, utilize that and make the issue. Clear, easy 5 mark questions. Then study material as well. Same question is there. Next 5C. A company had issued 20,000 8% convertible debentures of 100 each on 1st April 2023, 8% partly convertible. Debentures are due for redemption on 1st June 2024. Okay, no problem. The terms of issue debentures provided that 30% of the debenture will be converted into equity shares. Nominal value 10 at a price of 20 per share, and remaining will be redeemable at a premium of 5%. 30% of the debentures will be converted. 30% of the debentures. So 20,000 debentures into 100 rupees. That makes it 20 lakhs. 20 lakhs. So now what you're going to do? 30% will be 6 lakhs. And remaining will be 70% will be 14 lakhs. Now 6 lakh whichever is there, no. It is converted into equity shares, they said. Calculate number of equity shares to be allotted to the debenture holder. Clearly they said remaining will be redeemable at a premium of 5%. That means for this there is no premium. So 6 lakhs divided by 20. 6 lakhs divided by 20. 30,000 shares. 30,000 equity shares are issued. Clear? Okay. Give necessary journal entries related to conversion and redemption of debentures, assuming that the company has created DRR. Company has created DRR. So what will be the DRR amount? 20 lakh into 10%. 2 lakh DRR. Okay. 20 lakh into 15%. 3 lakh is DRR investment. Now here they are told also invested require amount for redemption of debentures at the time of issue. DRR investment is sold at par value. So what you'll pass? For this you'll pass the entry bank account debited to DRR investment. And for this, you'll pass the entry at the end. After everything, you'll pass the entry. DRR account debited to general reserve. These are the two additional entries. Then what you're going to do? Due entry. First, you'll pass the due entry for redemption. Then you'll pass the conversion entry. For conversion, what you will do? Debenture holders to equity share capital. For remaining, what you will do? Debenture holders to bank. The premium which is there, premium. Securities premium account debited to premium on redemption, or P&L account debited to premium on redemption. Premium of 5%. So this will be plus 5%. Clear? This is your easy 5-mark question on redemption of debentures. Okay, guys, let's go further. 6A. Okay, 6A, sir. Let's see what's happening in the last question. Company accounts. Arpit Limited with an authorized capital of 20 lakh divided into equity shares of 10 each. So basically, they have 2 lakh shares. Okay, 20 lakh divided into equity shares of 10 each. On 1st June, invited applications for 3 lakh equity shares. Authorized capital is rupees 20 lakh divided into equity shares of 10 each. Equity shares of 10 each. Okay, see this one, guys. Authorized capital of 20 lakh, rupees 20 lakh specifically, divided into equity shares of 10 each. Authorized capital is 2 lakh shares. On 1st June, invited application for 3 lakh shares. Wow, institute. 3 lakh equity shares at a premium of 5%. Can you tell, sir? Issue of equity shares is not possible because authorized capital is 2 lakh shares. No, you're going to give a note that all necessary resolutions are passed to increase the authorized capital which is necessary for the issue of shares at a premium of 5%. Okay. Amount was payable as follows. Application 2, allotment 7, 2 plus 5. 5 rupees is premium, 2 plus 5. First call 3, final call 3. Okay. Dates are given, be careful with the dates. Application is invited on 1st June. Application 2 entries, allotment 2 entries, first call 2 entries, final call 2 entries. 8 entries, pakka. All shares were applied for and allotted. That means 100% we know that there is no pro rata allotment. Okay. Mr. Naresh, who held 20,000 shares, paid the whole amount due on calls along with allotment money. First call and second call. Both he has paid. This is called as calls in advance. Calls in advance. So what will be the calls in advance amount here? Calls in advance. Naresh holds how many shares? 20,000 shares. 20,000 into 6. 1,20,000 will be the calls in advance. Final call was duly paid except a shareholder having 5,000 shares who paid his due amount on 1st March 2024. So 5,000 shares into 3 rupees. 15,000 rupees will be your calls in arrears. But he has paid on 1st March. He was supposed to pay on 1st Jan. He paid on 1st March. 2 months interest will be applicable. Okay. After 2 months along with interest on calls in arrears at the rate of 10% per annum. Company also paid interest at the rate of 12% on calls in advance to Mr. Naresh on 1st January. Give journal entries with narrations to record all these transactions in the books of Arpit Limited. Now you have to be very careful, guys. Okay, when you're calculating interest, you have to be very careful. For the first call, which is there, advance, it's 3 rupees. You will get interest from when to when. From here to here, you will get interest for calls in advance. For the other one, from here to here, interest. Okay, interest has to be calculated. Okay, and for calls in arrears, when you're calculating interest, it is going to be from 1st Jan to, when did they pay the amount? They paid the amount on 1st March. So 1st Jan to 1st March. 1st Jan to 1st March. So 2 months interest. So out of the calls in advance of 1,20,000, okay, for 60,000. 60,000 is the first call amount. 60,000, you're going to calculate interest for 1st July. From 1st July onwards to 1st November. July, August, September, October. 4 months interest. For 1,20,000, out of 1,20,000, the other 60,000. The second 60,000 which is there, you're going to calculate interest from July, August, September, October, November, December. 6 months. And for interest on calls in arrears, it is for 2 months. I hope you got this right, guys. 8 entries will anyways be there. Okay. Interest on calls in advance entries will be there. Interest on calls in arrears entries also will be there. Interest on calls in advance, it is paid on 1st January. Interest on calls in arrears, that is going to be passed on 1st March. 15-mark question, easy. No forfeiture, no reissue, nothing. And the last question is, what are the advantages of double entry system of accounting? There was 5 marks straight picked up from chapter number 1. That should be it, guys. It was an easy paper. Okay. Time could be a restriction. Okay. You always have to know accounts paper whenever you go. Paper can be lengthy, but this was very easy. Very easy paper. Straight up they picked from study material itself. Okay. So one paper has gone well, guys. Focus on your future paper. Next paper is law coming up.